Tamikta Batra, and with me is Mangalam Malu as well as Sonal Bhutra. Well, it is a day after the budget, but the news flow just hasn't stopped. It is the Adani stocks which continue to dominate in terms of sentiment at this point in time. But the Nifty, it seems to have stabilized. Remember, it's been around a 200 point that we've ranged in till now already. It's been a volatile week, so there has been some amount of semblance at this point. But remember, we do have an entire trading session to go through. We do have the Adani stocks which continue to be in focus. Separately, now in terms of the queue, the next port of call will be the RBI meet, which will take place in the first week of Feb. So that is something that we will be watching out for quite keenly. Separately, a lot of stocks in focus, and it's not just the insurance stocks such as HDFC Life, but a lot of earning reactions which we will be covering in the next 60-odd minutes, the likes of Britannia, Jubilant Foodworks, and not to mention a couple of the other stocks from the broader markets. All of them are reacting to either news or to the budget or to earnings. Can't keep track, huh?
Oh, yes. It's been a long list, right?
It has been a long list, but, it seems like the budget has just become a sideshow given the sort of action that we've seen in the share prices of the Adani Group itself. In fact, after a sharp fall in the share prices, Adani Enterprises has decided to withdraw its 20,000 crore rupee FPO in a board meeting last night. Group Chairman Gautam Adani has said that this withdrawal is in interest of the shareholders. Let's first listen in to the complete statement coming in from Gautam Adani.
After a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. For me, the interest of my investor is paramount and everything is secondary. Hence, to insulate the investors from potential losses, we have withdrawn the FPO. This decision will not have any impact on our existing operations as well as our future plans. We will continue to focus on timely executions and delivery of projects. The fundamentals of our company are very strong. Our balance sheet is healthy and assets robust. Once the market stabilizes, we will review our capital market strategy.
Okay, that's the word coming in from the Adani Group. In fact, we are also picking up from sources that the Reserve Bank of India has sought information from banks on their exposure to Adani Group. What we understand is that the information sought from banks is a part of the standard operating procedure or SOP to address new developments that may have taken place. Sources say that it is standard practice by the RBI to seek information whenever any developments take place, and that's where its regulated entities have exposures as well. Sources add that the RBI is seeking the information from banks as the central database may not have the latest information, especially linked to the pledge shares, as the CRILC updates some data weekly or monthly.
Okay, well, let's talk a little more about this story then. We have Mr. J.N. Gupta, the former ED at SEBI, who's joining in now to discuss all of the developments. Mr. Gupta, hi. Thank you very much for taking the time out. First, your broader view in terms of what is taking place with Adani, considering that the pressure which is emerged after the Hindenburg report has continued, and now the FPO is withdrawn. Even there is pressure in terms of the Adani bonds. How would you approach this story on a larger basis, and how should shareholders react to it, retail shareholders?
Okay, we got to divide all the discussion in many parts. One is Adani Group as one, then Hindenburg report, and then withdrawal of FPO. So let me take it from the last one, the withdrawal of FPO. See, if you look at the problem that Adani Group is facing today, is it facing a lot of pressure from the market and lot of pressure account of the Hindenburg report to deny and whatever. Now, when this FPO was subscribed, the price was around 2,800, 2,900. And the investors were sitting on a loss of 300 to 400 rupees at the maximum, and everybody had hoped that when the FPO gets subscribed, probably the market will become in a positive territory. But it happened reverse, and the market fell. The share price fell about 800, 900 rupees after FPO closed. As a result, what happened? The investors who had invested in FPO were sitting in a loss of about 40% of their investment from the day one. And that would have created another pressure, not anything, but in the market itself, probably those investors would be wanting to book the loss, or they would be pressurizing Adani that what is happening. So in order not to have pressure or increase one more pressure point, it was better to withdraw FPO and then look at the other side of it. Now, those investors who are willing to buy at 3,200 rupees or 2,900 rupees, or whatever it was the price, and when they had got their money back and the market price is less than 2,000 rupees, probably they would put the money back in the market, buying the current shares so that the pressure on the stock will reduce. So it is, if at all it happens, that this could be a positive for the stock, because the same money will come to buy the same stock that is available in the market. That is one part. The second part is this: whatever Hindenburg report has said, I don't think there is anything new in that report, because everything has been in public domain. Now, this is a war of words between the two, Adani Group and Hindenburg Group. Hindenburg says that Adani has accepted what Hindenburg has said. Now, Adani has no option but to accept the fact. When you say Rajesh Adani was arrested in 2005, Adani can't say that he was not arrested. But Adani has said that he was exonerated also. Hindenburg has not said that he was exonerated. So Hindenburg report, if you look at it, is provided only that material which to cause suspicion in the report. And unfortunately, market doesn't have the patience to see or sit on the judgment. They see a trigger and then panic starts. That is second part. The worst part is that everybody is saying now that Adani is sitting on a bomb or hot potato of debt. And unfortunately, now you are a business channel, you analyze it something, but we have seen so many YouTube or so many journalists who do not understand balance sheet or profit and loss account or liquidity. They have been saying India doob jayega, RBI doob jayega, Adani doob jayega. All these things are panic creation. And my own understanding of balance sheet is this, that there is no pressure of debt in most of the company. The reason being they have got healthy cash flow. And most important thing is that unlike any other businesses which have gone bust, all their businesses are brick and mortar business. Now, their port entity, it is 25% of the Indian port capacity. Now, you can't say that tomorrow the entire import-export will close because Adani port is not doing well, something like this. Similarly, their Adani enterprise, a road asset and
So,
airport asset.
Mr. Gupta, we
say,
understand. We take your points, Mr. Gupta. We understand, your position on this itself, and because of the panic that has been created, could you give us a sense? You've been at SEBI before. What is it that the regulator should be doing at this point in time to assuage this panic, or maybe come clean on something like this? Because we've heard from our sources that RBI is asking the banks for their exposure to the group, which is standard practice as they do. Is there a standard practice for SEBI as well? And what do you think the SEBI should do right now?
See, I tell you, first of all, I cannot speak for SEBI as of now because I am no longer, it is more than 11 years I left SEBI. But I would say when you say RBI asking this data, now, are you telling me that RBI is not having this data, that what is the exposure of banks on thing with their hundreds of statement going back and forth every week? RBI knows everything. But anyway, this is what for public consumption is there. As far as the SEBI is concerned, if you look at Adani Group's statement, they have said that everything has been disclosed. And SEBI policy is very clear that buyer beware, investor beware. So if there is everything that is put in the Hindenburg report has already been disclosed by Adani somewhere or other, then there is no way SEBI can say anything.
Okay.
If at all tomorrow it is found that there is something which is missing in the disclosure, then SEBI will certainly act. That is point one.
Okay.
But my bigger worry is this, that in India you have a very good risk management system in the stock exchanges, where if any short position is created, it is very well known to the investor or regulator and the exchanges. Now, here the position is that we do not know where and how the short position has been created. Is there any regulatory vacuum which
Mr. Gupta.
allows short? Yeah.
Yes. So, Mr. Gupta, you are saying that SEBI's motto is buyers beware, but right now we are talking about investors as well. So, we are talking about investor safety because we have seen a big fall in the stock prices as well. And when we talk about this fall on public offer, have you seen it happening in the past when you were with SEBI, that any company did come with a large FPO, actually withdrew it because we have been talking about it not getting enough subscription, then getting subscription at the last moment. So where do investors stand in all this, the retail investors specifically?
See, I tell you, again, I will come back to you that as far as my memory goes, we have not seen, or rather, I have not seen such a large FPO being withdrawn, and that too after being fully subscribed. So that is the first time we have seen. As far as the prices going down, please understand the SEBI will not intervene unless until it finds that prices are being manipulated. There is someone who is pushing the price down or some manipulation is happening. So, and in today's scenario, when there is a lot of surveillance risk management system, such large scale manipulation is not possible, because you are not talking of a market cap of 500 crore or 1000 crore, you are talking of market cap of lakhs and lakhs of crore. So such manipulation is not possible. So as far as I am concerned, I would say that I rule out any manipulation that is happening in that thing. So that is the issue, I would say.
Okay, all right, Mr. Gupta, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is the view coming in from JN Gupta. He has been with SEBI in the past, so that's the perspective with regards to what is taking place. For the Adani stocks, there's some recovery on an intraday basis for stocks such as Adani Ports, but remember, it hit a fresh 52-week low on an intraday basis in today's trading session, so some amount of recovery from those levels, but nonetheless, net weekday for the entire group of companies. We'll take a short break.
Back, you're still tuned into Halftime Report on CNBC-TV18. Well, we have a lot of earnings which we need to focus on, and GNA Axles is one of them. Posted a good set of Q3 numbers, posted a strong revenue growth, and EBITDA margins have come in at a multi-quarter high. Whether that's sustainable and what's the outlook going forward as well, we have Mr. Ranbir Singh, who's the MD and CEO of the company. Mr. Singh, good afternoon. Thank you so much for joining us. Well, you had indicated earlier that second half could be weaker than the first half, but that's not what we are seeing in the numbers in Q3 at least. What is the guidance? Because you had guided for 15%. Will you be able to actually exceed that guidance and revise it upwards basis 9-month numbers?
Good afternoon. Thanks for inviting me today. Actually, the top line has grown this year if you compare it with last year, third quarter. And this year, initial guidance was around 8 to 9%. But because of the good performance from the customers and all segments performed very well, and so we had to revise it time to time on quarter-to-quarter basis. So this time also, we are going to revise our overall numbers. Top line, it will be over 20%.
Okay. All right. So that is on the top line, but it's indicating, is it something in Q3 which has changed? What are the demand trends looking like?
Q3 was, if you compare it with last year, it's exceptionally 33% plus. And Q4 also, it is going in the same pace, because domestic and export both are performing very well and demand is strong. And there won't be any further improvement, but we will be able to well compare with the Q3 in Q4 also.
Okay. Mr. Singh, when you say demand is strong, domestic market is growing, export market is growing, can you quantify it for us? How did both these segments do in the quarter gone by? And what can you guide us for, say, in the next 2 to 3 quarters in both these segments, domestic as well as export?
If you compare the numbers or in CV market, in first half in India, in domestic market, CV market has performed over 60% growth. Then now, till now, in 9 months, it has performed 42% growth. But overall, The guidance from the truck assemblers, vehicle CV market, it is over 30% growth will be there. Similarly, even today, Hemant Sikka was there on the channel, and he has declared the growth in tractors, it will be between 5 to 7%. And that it's going to be very strong because there is a strong base of tractor market. And so the numbers are reflecting less like 5 to 7% because already that market has crossed 1 million numbers per year. Similarly, in export, further there is no much growth, but whatever level has achieved in export demand and uh, requirement, it will be stable for next 2 to 3 quarters.
You know, you said that the demand is going to be stable. So let's talk about a couple of numbers, Mr. Singh, if you could give it to us. The last couple of quarters, you've been doing a quarterly run rate of close to around 120, 130 crores per quarter in terms per month in terms of order booking and sales. What is that run rate likely to be at? Secondly, your capacity, what does it stand at? Because you've increased your capacity by about 15 to 20% over the last year or so. So what does your capacity currently stand at and the utilization?
Mangalam, as last time also I have clarified, from internal accruals, every year we are enhancing our capacity by 20%. Whatever capacity is utilized in certain period, in say 3 to 4 months or 6 months, so same simultaneously we have to add same capacity to invite the new customers and to capture the new geography or new requirements.
So what is the order booking and what is your current capacity utilization? Your order bookings per month?
Like last year, we have grown by 42%. This year, we are hopeful it will be 23 to 24% growth. So similarly, additional 25% capacity is on the annual, which will be completed by mid this year.
Okay. So, you know, you're guiding for a very good exit run rate for FY23. But when you go into FY24, there will be a high base impact which you'll probably have to reckon with. But based on what you're telling us in terms of order bookings as well as growth, what is the kind of visibility you have for FY24 as a whole? Would that replicate this 20% growth or do you think that will probably scale down?
In numbers, the market can grow, but steel prices are softening, are going to come to the normal level. Freight is getting the normal level. So overall top line growth won't be there more than 8 to 9%. But in numbers, it could be 15 to 20%.
Okay, 15 to 20% in FY24 as well. Last question before we let you go. What is the update on the SUV plant utilization? By when you will be able to see it at maximum utilization levels? And what does it do generally? What all that you're telling us, improvement in growth and numbers as well, to your working capital days because they have been elevated?
In SUV and small component division, already we have crossed utilization over 50%. And from May, June, mid this year, it will be utilization will be 80%. And after that, we are planning some capex to debottleneck certain areas. So then further growth will be there by end of this year. As so far as working cycle is concerned, it is inventory net is a total cycle is 120 days. So it is historically also it's because our export business. The cycle is of 5 to 6 months recovery, inventories and shipping and all. You know, we have to maintain inventory at the customer end. So overall, it's 120 days.
All right. Thanks a lot, Mr. Singh, for joining in and giving us all those details. Wish you good luck for the remainder of this year, though we would have liked to speak a little more about your operating performance as well. But out of time right now. With that, we'll step into a short break. But as we do that, here's some exciting news for the most coveted leadership awards. They're back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, credible, powerful Ibla jury on February 8th, right here on CNBC-TV18. Well, amidst everything that is happening in the market, the one sector that stands tall is the FMCG pack. Britannia, after a good set of numbers, up at a record high. ITC continues its run from yesterday. Remember, it reports its numbers tomorrow as well. So from yesterday's low, the stock has rallied almost 15% lower than feared tax hike. And looking at these two companies, we have HUL as well, which may have felt a bit of FOMO out here and has moved to the high point of trade. So HUL too has done well. And amidst times of volatility, people usually stick to the defensives. FMCG is one of them, and the IT pack is the other one, of course. Prospects for the Fed continuing on a dovish path going forward. Also does well for the IT pack. It's the IT index and the US Nasdaq which have done so well so far in 2023. But Ekta, pharmaceuticals also in focus.
Yes, absolutely. I can't believe you didn't mention pharmaceuticals as defensive.
Because they have been underperforming for a while, which is why.
I think he left it to you to talk about.
Well, yes, FMCG, IT, but even pharmaceuticals. But one such stock which has actually declined on a week-to-date basis is Sun Pharma. It's down around 3.7%. It came out with its numbers this week. And overall, it was a good set of numbers. It was a largely in-line set of numbers. Margins came in at around 26-27%. Specialty business on an adjusted basis was up around 20% on a year-on-year basis as well. So overall, specialty led in terms of total growth, and revenue was in line with estimates at around 13 to 14% as well. So overall, an in-line set of numbers this quarter. We, in fact, do have with us CS Muralidharan, who's the Group CFO of Sun Pharma, joining in to discuss their Q3 performance gone by. Mr. Muralidharan, thank you very much for joining in. Well, I am going to start with the specialty sales, which were up around 20% on a year-on-year basis. This is adjusted for that milestone income that you did record this quarter. What led to the growth, and can we expect this run rate for coming quarters as well?
We stated that for the quarter, the US specialty revenues stood at about $235 million, growing at 28%. This was primarily driven by a strong contribution in Ilumya and Winlevi. And if you see the last 5 quarters, we have been consistently maintaining the momentum, and we expect that momentum to be maintained as we go forward.
All right, Mr. Muralidharan, what about specialty sales? I mean, the estimate is that it can reach about $1 billion by, say, FY25. Is that a fair assumption?
You know that we are not giving any guidance at this point of time, but having seen that, if you see on the 9-month period in the current fiscal, we are almost close to the last year's full annual specialty revenues. So this is what is there as of the numbers we are trending at this point of time. But our focus on specialty revenues business continues. We have a strong momentum in terms of addition of product portfolios. So that should pave way for concept growth engine in the future.
Okay, so can you talk to us about your latest acquisition, Concert Pharma? By when do you expect the results from the lead product to kick in?
Immediate priority post-closing of the transaction will be to follow the estimated timeline given by Concert earlier, which is an expected filing in the first half of calendar year 2023.
Okay, all right. What about US price pressure this quarter, Mr. Muralidharan? Has it improved, and what can you guide us on when it comes to price pressure in the US markets?
So as we maintained our position earlier, I think nothing has changed much. Consistently, we are also facing some headwinds. However, this is more specific to product specific. As we have shared, particularly, we can't be saying the entire portfolio we are facing, but given the product specific nature and the competitive environment, pricing pressure continues to remain in this sector.
All right. About the pricing pressure itself, Taro has been facing challenges as well. The performance has been sluggish out there despite contribution from Alchemy. The recent acquisition, I mean, can you give us an outlook on the performance there?
Taro being a public company, they have given their Q3 results and published the press release where they have stated in terms of the headwinds they are facing in the market. So beyond that, being a public company, it will be difficult for us to add any specific comments on the performance.
Okay. But sir, you know, just to add on to that, Taro is a part of the company. You do consolidate the numbers. It has a strong amount of cash in books. Is there any kind of idea in terms of the utilization plans for this cash in books? Would you be rewarding shareholders? Would Taro probably look at another acquisition? Any kind of guidance?
Taro has their own internal strategy, which is driven by the management and its board. So as and when it happens, I'm sure that the Taro management will make the appropriate announcement. At this point of time, it would be inappropriate for us to comment, specifically because that's being a public company.
Okay, so that's about Taro. Let's talk about your India business, because it did fall short of expectations this quarter. What is the outlook on growth? What kind of numbers are you penciling in?
So quarter on quarter, there could be volatility witnessed. However, if you look at the underlying MAT data which is available, we have grown at about 11.4% against industry growth of 7.7. And more importantly, if you look at the MAT December 22 last 1 month's data, market share improved from 8.2 to 8.5 as of December 22. So the underlying business growth, we don't see any concerns at this point of time.
All right, and what can you talk about margins? I mean, they've been in the 26 to 27% sort of band earlier itself. What can you, where do you see them going given the sort of issues that there are with regards to supply chain, higher R&D spend, US price pressure, all those factors?
So what I can share at this point of time without giving any guidance on EBITDA margins is that if you look at our last couple of quarters, even more than that, we have been able to consistently keep our margins from 25% plus 25 to 27% range at this point of time, despite our increased commitment towards R&D expenditure or higher S&D we have seen as the normalization of operations happened post-COVID. So that's our target, and we only have a focus on efficiency and operations, control on cost, and improve the margins as we go by, while that will not deter us from making investments for growing the business.
Okay. What about the Halol import alert? What was the impact on sales this quarter on account of it?
So what we have already shared when this development happened is that there is a 3% approximately the supplies to the US at consolidated revenues level. So that we already shared. And then more important to note is that apart from Halol, there are other facilities also supplies the US. And this 3% of the products, out of which now there are certain non-exempted exempted products also available which we will supply. So this is the overall consolidated impact. Given our size of our organization and the overall global revenues, we don't see any much impact at our end.
Okay, just another follow-on on Halol, sir. Can you tell us how many products, in fact, are exempted from the plant which you could supply to the US? And what is the status of remediation? When do you expect the plant to possibly be back on track, remediated by?
So we are working on the remediation plan at this point of time. However, we will not be able to give any specific timelines on that.
Okay, you also have an official action indicated status on your Mohali facility. Any clarity there?
So yes, we have, you're correct, we received OA status in Mohali, and we are working with the regulator on that, and whatever required to put the facility back on compliance status, the work is continuing.
Okay, all right, Mr. Muralidharan, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is the word coming in from Sun Pharma that yes, they are seeing some amount of selective headwinds when it comes to price pressure in the US markets. They are definitely bullish on the specialty sales business. The other key factor to watch out for would be the latest acquisition, Concert Pharma, and one of their lead products, which is basically for alopecia, hair loss, which people suffer from. Whether or not that's going to come to market, by when it's going to come to market, will be an important trigger to watch out for. Overall, in the past week odd, the stock has lost around 4% down around 1% in today's trading session as well. We'll take a short break. There is definitely some amount of incremental pressure which is emerging back into the markets, courtesy the Bank Nifty. So we have the Bank Nifty, which is now down close to around 300 points. There's a renewed amount of selling pressure which is taking place. Adani Enterprises is now showing a cut of around 14% odd. Adani Ports is down around 6.5% odd. So 13% off its day's high in today's trading session. But there are other losers which are seeing exaggerated losses at this point. So UPL is down close to 6% odd. HDFC Life, which has already seen quite a deceleration since yesterday, continues to see a downtrend. So down around close to 6% odd for HDFC Life. So losers across the board at this point. ITC, however, is still managing to hold up with a gain of around 5% odd, along with Britannia. In fact, Britannia is one of the top gainers on the Nifty today. It's up around 4% odd. Manglam did catch up with Varun Berry, the MD of Britannia Industries, a few days ago. Listen in to what he had to say.
In the last year or so, we've got the whole croissant JV back on track. It's doing really well. We've recently announced our cheese JV with Bell. We are getting traction on some of the adjacency products as well. Cake is back. Cake was, on the go. So it was affected very badly during the pandemic. We're getting it back. We've got the momentum there. So now is the time for us to get back on stream with our total foods dream and make sure that we get new products to the fore, we get new connections with consumers, with new offerings, and that's what we are looking for. And yes, it'll take us a little longer. And what we have done is the new businesses, we've set it up as agile teams, right? So the decision-making processes are much shorter. They report directly to me. I take very quick decisions, and they get what they need. And I think that is working quite well for us, and that's showing in our new business, results as well.
So, how long before the core actually gets cracking at a much faster pace, so to say?
Well, see, you're right. The fact is that when your business is large, it becomes very difficult for the smaller businesses to start to contribute big numbers. But if each one of these was to contribute 1%, and let's say we had 5 of these, that would mean 5% to the overall business, and that's a big deal. But we are hoping that that 5% becomes 10% over the years, and we are able to get, more and more to the pie.
So your core grows at about 10% volumes. That's what you've, your aspiration has been medium to long term. The adjacencies add in another 5%, growing faster than the base. So, increasing in contribution. Your international business grows a little faster than that. And then you have some cream, so to say, coming on top from maybe some newer categories that you enter, your capacities, etc. Are we looking at mid-teens, high-teens sort of growth for the next foreseeable future?
Well, that's the aspiration, Mangalam, for sure. If I was to write a strategic plan for the next 10 years, that would be my target.
What other things would your strategic plan include?
Well, I can't give you all the details now.
How much more is there potential of incremental cost savings, and what are the areas that you're looking at in terms of cost savings?
So cost savings, as you know, Mangalam, we've been saving almost 2% for the last 8 years.
Yes.
Right? And this year it's going to be 2.5%. So I've been asked this question forever.
Yes.
Right? That, how long are you going to get this 2% out? And we proved it this year that we can even get more than 2%. You're probably going to get 2.5% because the inflation was so high. We really redoubled onto that, saving platform.
You've reduced the distance that an average truck of Britannia travels.
Yeah.
Give me some other examples where you see scope for costs to reduce.
So we are a baking company. A lot of cost in energy itself because we bake products. There's a lot of energy which is required. And that's one of our biggest platforms. If you think about it, we've got so many factories and so many baking lines. We keep tightening the technology. We've also got this, new oven, which is called the 21C oven, which is patented.
Okay.
So all of those things, that's our biggest area of focus. How do we get savings out of the process of baking?
Are we looking at EBITDA back to the 19% plus levels that we once saw during the pandemic when things were good for you in terms of cost and demand?
We are in a place where we've sort of got all our inflation, outweighed by either price increase or cost savings. So we are in a good place, and I think we are pretty much, at the level that we were at the pre-COVID kind of levels.
What is your ideal revenue mix?
So
in that strategic plan that you spoke about?
So 10 years from today, 5 years from today, 2
3,
years...
5, 10, give me all of that.
Oh my God.
The glide path.
Okay, so I would say 3 years, at least 35% of our revenue needs to come from outside of biscuits, right? 5 years, almost 40-45 needs to come from, adjacency categories, which is outside of biscuits. And ideally, in let's say 10 years, it should be a 50-50 portfolio.
All right, that is a very interesting conversation with Varun Berry of Britannia, talking about cost savings, margin outlook, and most importantly about croissants and cakes as well. So, of course, we'll keep getting you excerpts of that conversation. Britannia is the stock on our radar today, up 4.5%. Time for a break now. On the other side, Manisha Gupta will join in with Shashikant Dalichan Shah, who is the chairman at Lab Grown Diamond and Jewelry Promotion Council. Stay tuned for that conversation.
So is Shashikant Shah, he's chairman, Lab Grown Diamonds and Jewelry Promotion Council. Mr. Shah, hi, welcome to the show. And while the budget had a lot to offer, it also did a mention on the lab-grown diamonds, and the finance minister has cut the custom duty from 5% to nil for the seed of lab-grown diamonds. How much of an impact does it make to the industry in India?
Hi, Manisha. Thank you for calling. First of all, we, the council members, the lab-grown diamond industry, thank you to our finance ministers, Nirmala Sitharamanji. The 5% reduce the duty on the lab-grown diamond seed, which is a manufacturing cost, will come down again by 5%, and it will boost the market. It is very easy to throw the goods in the market by reducing 5% more to our end users, our customers. And the second thing, the lab-grown diamond industry now going to promote in domestic market also. So our mothers, sisters, they are going to be delighted by buying a lab-grown diamond jewelry in our country, because by buying a gold, she is going to satisfy, but buying a diamond is going to delighted, because now she come to know yes, I am also a queen, I am also a princess, I have a diamond.
Absolutely. Mr. Shah, as of now, what is the price difference between a natural diamond and a lab-grown diamond?
Say near about 60 to 75% less than the natural diamond.
Okay. And what is the overall market right now for lab-grown diamond within the diamond as an industry, even when you look at the export numbers?
Worldwide, it is 15% in the world. We are manufacturing CVD diamonds in India, and India is going to #1 in the world within 2-3 years. And in India, only 2-3 brands are promoting nowadays. But after this budget, I think the end users come to know, yes, there is a new category in the diamond trade, the lab-grown diamond. And they are now going to inquire in the jeweler's shop. And it will go another, say, 5% market share more for lab-grown diamond coming year.
Mr. Shah, also, when you look at the last year, we did see lab-grown diamonds export gain up by 54% on a year-on-year basis. What is your expectation now for this year?
Now it is going to 60 to 65% more year-on-year.
Also, as you said, there are 2 to 3 brands right now which are promoting or making lab-grown diamonds. What has been the kind of interest that we've seen in the Indian markets?
See, in the Indian market, the woman tendency, जो दिखता है वो बिकता है. So if there is only 2-3 brands and the big houses will come with the mass advertisement, the benefit of lab-grown diamond because it is a clean diamond, no effect to anything. So it is pure carbon 2A type diamond, chemical vapor deposition, called a CVD technology.
Right.
So now the end users, the age group of 18 to 35 and B plus family will take benefit of this new segment in diamond trade, lab-grown diamond.
Clearly.
And it will going to boost very, very big way in the Indian market and the world also.
Mr. Shah, the finance minister also talked about a potential high employment space that can be generated from here on. What's your sense on that?
Yeah, the Indian Institute of Technology, they give a grant, as per my best of knowledge, to one of IIT in India. Those who young technocrats, our engineers, going to develop more efficient machineries and formulas for the grow this lab-grown diamond. And it will give our country the best to perform in the world market.
Okay. Mr. Shah, thank you so much for joining us with your take on what's been announced in the budget. Manisha, thank you so much for taking us through that discussion. And do you like diamonds?
Oh, yes, especially if they are 60 to 70% lesser than the natural diamonds, maybe yes.
Who doesn't like lesser prices, right? Okay, thank you so much for that discussion. And with that, we'll slip into a short break. We'll get you more on markets and stock-specific action on the other side. Stay tuned. continues to be a volatile market. The Nifty again saw some selling from the high, so it's down 35 points. And the mid-cap index, that's the one which is outperforming the markets. That too has fallen from the highs, but sitting with gains of 35 points, with the Bank Nifty deep in the red, down around 140 points. From the broader markets, I wanted to point out ICICI Prudential, because that stock is at the day's high. We've been talking about this entire taxation angle on premiums above 5 lakh. And the company in its commentary did say that they have a total exposure of around 6% of the total APE for 9 months of FY23, which is non-unit linked policies with yearly premium of 5% of more than 5 lakhs. So that stock is at the day's high. Remember, these stocks were brutally sold off in yesterday's trading session. So there is some sort of buying that we are seeing there. And numbers, they continue to trickle in. So we have First Source, which is up around 3% on the back of numbers. We'll keep tracking that for you. But for now, we'll take your leave on this edition of Halftime Report. All the market action is something that Business Lunch will take ahead.